Hi, I'm Parag Singhani with the Westwood Energy Infrastructure Team. Today, I'm going to give a first half update on the sustainable energy space. Our focus will be primarily on solar, which is about 40% of the sustainable energy portfolio. And then secondarily, I'll discuss why we own no wind in the portfolio today. There are several important developments so far in 2023 that are driving sustainable energy stocks. First, NEM 3.0 and higher interest rates have slowed residential solar installations in California. Second, tracker companies are beginning to see both volume and margin improvement as delayed utility scale solar projects move to completion. Third, reshoring of manufacturing is happening today, allowing companies to capitalize on IRA tax credits. Fourth, wind turbine issues have slowed and delayed wind farm installations. And finally, hydrogen tax credit rules from the IRS are anticipated in coming months, which we think could lead to more hydrogen project announcements later this year and into 2024. The most common question we receive today is what is going on in the residential space? As you can see in this graph, California installations have slowed. This is due to NEM 3.0, which started in April. California reduced the price it pays solar producers to sell energy back to the grid under the new NEM 3.0 regime. This change has reduced the economics of installing a rooftop solar system for residential customers. Couple that with the higher cost of borrowing, and we've seen a significant slowdown in installations. The California market represents about 40% of the total US residential solar industry. The slowdown has negatively impacted component manufacturers, resulting in lower shipments in 3Q to help rebalance inventory levels for their products. We hope to see that this reset will lead to better outcomes in 2024 for those companies. Several component companies are trading near their lowest PE levels in years. On the bright side, utility scale solar continues to grow at a rapid pace as new projects move to completion. Within that industry, we see the most opportunity in solar trackers. Tracker companies are experiencing both margin expansion as older, lower priced projects roll off and higher volumes as more modules clear customs. Last year, there was a significant slowdown in utility scale solar installations due to anti-dumping duties for imported solar modules. The rules were updated in the summer of 2022, and backlog at Customs and Border Control is now being cleared. Additionally, American tracking companies are expected to qualify for IRA Made in the USA tax credits, which should help bolster earnings in 2024 and beyond. In addition to trackers, domestic module manufacturers are seeing significant contracted demand for new production capacity. Module companies continue to expand with capacity fully contracted several years into the future. Moving on to the wind market, we remain cautious on the industry as headwinds continue to slow installations. Earlier this year, reports of wind turbines collapsing slowed new installations, and insurance companies have been slow to re-underwrite projects. We believe that wind installations will re-accelerate in the future, and wind power does benefit from IRA tax credits, but at this time we remain on the sidelines until operational issues are resolved. Thank you for taking the time to hear our thoughts on the sustainable energy space. If you have any questions, please reach out to your Westwood representative and have a good day.